Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special investing report. Today I want to look at the issue of infrastructure investment and how New Zealand funds that infrastructure investment, because we've got a lot of infrastructure investment to do over the next 10 or 20 years. Roads, power, broadband, hospitals, schools. We really need to spend this money on this infrastructure to improve our ability to generate wealth and productivity. We certainly need that infrastructure to boost our productivity, which is at woefully low levels at the moment. So how do we do this infrastructure investment right now? For the last 25 years or so, central and local government have funded this spending out of current cash flow. Essentially, they're forcing the workers of today to pay for investment in services that consumers tomorrow, or in 10 or 20 years' time, will consume. And you have to ask, is that fair? And isn't really the best way to invest what we need? Are we investing enough, for example? Now, why is this the case? Well, you can look back at the legacy of Robert Muldoon. He borrowed big time from the rest of the world to invest in infrastructure, or what he called think big, which in those cases were several big power projects, which we still use today. But the problem was that effectively bankrupted New Zealand in the mid-80s and created a group of political leaders, politicians, who hate the idea of borrowing to spend on infrastructure, particularly foreign borrowing. So we now have this business where we use today's cash flow to invest, and we've got an infrastructure investment deficit. So how do we get around that problem? Now, John Key over the weekend has proposed the idea of infrastructure bonds and bringing in public-private partnerships. But it's worth having a look at what we can currently invest in now to pay for that infrastructure. You can actually invest in government bonds, Kiwibonds, which have just actually cut their interest rate by 50 basis points to 6.25%, so not that attractive for people looking for a higher return. And it's very hard to get local government bonds. The Bay of Plenty Regional Authority recently issued some bonds, but you don't see much of it. And there's some reasons for that. Local government tend to be quite fractured and timid, and they're not really well organised to issue bonds. And there may be a case for the local government authorities to get together to issue bonds in one big lump. We see that in some places overseas where there are serious local government and semi-government bond markets. And New Zealand certainly needs that. Just imagine if we'd had that in the last decade. Would so much of mums and dads' money been put into finance companies if they'd been able to put money into local government or semi-government bonds instead? I don't think so, and we may not have seen so much money lost. So, in summary, we really do need a way for New Zealanders to invest in our infrastructure so that we don't have to borrow from overseas, and so we've got some decent bonds, local bonds, that we can invest in. I'm Bernard Hickey. That was an investing report for interest.co.nz.